Okay, hello, hello guys. Hope you're good. So today we wanna in this live I'm doing right now. I just wanna backtest an aggressive method, like aggression, like how aggressive can I be? So let's say I finally am trading a 100k account. So we're gonna call this session 100k account, right? And our starting balance will be 100,000. So we want to be aggressive, such that we're trying to get payouts. Because for me, it's a business, right? And there's no reason to be in a business where you're not, are being profitable. So my thesis is that we buy a bunch of accounts. I can finally afford to buy 100k accounts, and then I want to see how fast can I nail 10% target, right? So that I can quickly get funded. So target is 10%, right? And want to be doing this like in a smaller time frame. Let's say we'll be using a 15-minute time frame, and you'll be using 4 hour and 1 minute, 4 hour and 1 hour. Right. So the whole idea is I must be holding the trade for several days, and the other thing is that the pips, the stop loss will be small. Stop loss will be small, roughly 15 to 20 pips. 20 pips stop, right? And yeah. So I also have to select the date. So let's take the current year, this year. Let's start it in January, then January the 1st, and then description optional 10 minutes. Okay. So what we're gonna have to do is, since I'm advertised stop loss, I have to take note of news events as well. So I will be trying to take note of news events along this week, so that I'm also informed in this GBP USD, or let me start Euro USD, because I never was good at Euro USD. I always get punished by this one. So let me try Euro USD, since it's the most traded pair, and I can save that. Alright, so the risk parameters are in line with this principle. Let me pull up the calculator. So this is how we're trying to risk. So same thing as prof firms do it, right? They say they risk 0.05% times the whole 100k. So that's my threshold, right? I can't lose more than 5,000 per day, and I'll be aiming to make at least 3 trades, and each trade will be of about 14%, right? So each trade I can only lose $700 times 3. I can only lose 2.1 out of the whole daily loss of 5,000, and that means I can only lose 42%, right, of the daily loss, and then I can take that as an L and wait for the next day. So we have 3 tries, right? If ever want to increase our tries, we're actually gonna decrease the risk, because we said 700 per trade, right? So if we aim to go for 7% per trade, that's 0.07, then we multiply that by the 5,000, then we get 350. So I risk 350 to make more than that. So it depends on the lot size, because now if you come in the lot size, right, say for your account balance of so USD, and then account balance is 5,000, right? And then this percentage we're risking 7%, right? Or initially the 14%. It will show us the amount of the lot size we're supposed to use. So this is babypips.com. You just type position size calculator, and then you get it. And then the stop we'll be putting. So we said, okay, usually I'll put a 50 pip stop, right? And the pay Euro USD we calculate. That means for each position trade I put a standard lot of 1.4, right? But then if I'm gonna be, and the mounted risk is 700, so 1.4, and I'll be targeting like 3 times just 2.1. But then now if I'm gonna put a 15 pip stop loss on holds, then that means for the same loss of 14% of losing $700, I can put a 4 lot size, right? So this is what we're trying to do, right? So 15 pip, it's gonna calculate. So the unfortunate thing is that trade is CASA, right? So this is our item. Click the message. So on traders CASA, you won't be able to see the lot size that you are actually putting, because it just automatically preconditions everything based on the stop loss you've put and the risk percentage that you lose. So automatically it calculates you a proportional lot size. But then in the same effect that if we are comfortable in losing 14%, then we should minimize our trade to 15 stops so that we can still lose the same amount and call it a done deal, but possibly any more. Now the upside is that for each 15 pip I get 700. So if usually my target was to make to catch like 30 pips, right, or even 50 pips, right, that's 50 times 50 divided by 15, so I get 3 times, that's a 1, 2, 3, and then 1, 2, 3 times 700, and already that's 2.3, right, than targeting 150 pips. So yeah, that's the case we have there. So let's go to trade CASA and let's go. So this is a chart, right? So we go on the daily time frame. I want to quickly analyze it. Let's go to weekly, and then in the weekly we can see we're in a downtrend, and now we must have been in an uptrend here. So what I'll also do is I'll just put the indicator here, the 15, the moving average. Although I can see that we're clearly in a downtrend, now there's an uptrend, right, in the reversal, and I can also see that this is the first change in character to the upside. So what? Yes, Yebo, just hold on.
What is this?
Oh, no, these are
How much is? Where are you?
I don't know, we went for some people's school. When I was not supposed to be inside. Okay.
I am coming just now. Just I don't want to put the bit of this. See you there.
Okay, sorry for that, guys. I was gonna stop, but I'll just edit it out of the whole thing. So let's look at the weekly time frame, right? So clearly we've been in a downtrend, right? And we can say this is one swing, like relative to, because we don't want to be on the wrong side of the market, right? So clearly we've been going in a downtrend, right? Yes. So what do we have? We have this high, all right, and change its thickness to 3. So we have that high and that low according to the weekly time frame, right? Because that was the last high, made a lower low. So clearly this is what we're working with. So this is a range, right? And then in this whole range we could look for a 50% level, so that we just know where the 50% level is. So take a fib retrace, mark it like that, take this, boom, shift, change that to dots. Right, so this is discount, this is premium and this is discount. We want to be buying in discount if we're going to target this high, and we want to be selling in premium if we're going to target this low. So those are two ranges, right? And the other thing to notice is as we zoom in, what else do we have now? As the market was sliding down, it took out this low. This is an important low, right? Because that's the low, the signal that we're going to the downside. So put it on 2p, and I'll put it on a line. So this is a low that was crucial because as the market was rolling down, made a lower low on this low, because this was the previous high and this was the previous low. So now this is a low, and now we are above that high. And now let's look for other key areas. So as we're going down, this is the first time we broke structure right here, right? We broke structure right there, and then when we broke structure right there, there was a fair value gap that was left, so we can mark off that fair value gap as a point of interest in the future. Now, what are we targeting? We took out buy side here, took out buy side here, took out buy side here, and we aggressively took out buy side. We never got a chance to dip back, except for this first time here, and we rallied back up, made a higher high, rallied back up, made a higher high. But this is the first time we're dipping lower, but we just took sell stops that are resting here, and we rallied up, right? So where else is buy side? We took buy side here. There's buy side resting here, alright, and we just injected into it, but that's not fulfilling it, but we can say a sort of a field. And then we also have buy side there, buy side here, and buy side there, and buy side here. So all these regions are regions where there's buy side, right? Although we know that we're in a discount, we could be looking to short, but anytime we're looking to short, we want to short above buy side. So we don't want to be shorting below buy side. So like this trade, would only short this trade after we penetrate through buy side, and then we short, right? So same applies. We want to expect to go higher than this, and going higher than this means that we're going to fill in this one. So we could sell anywhere in between here, sell anywhere in between here, and sell anywhere in between here where there's this fair value gap, right? So what we want to do is, since we were going to the upside, we left buy side here, right? And so we have one buy side resting here. The buy sides that were here, we took them out, so we just have this one buy side, and we had sell side here and here, and we took it out. So the market has buying potential to go to the upside, because this is where buy side is, and we're resting also here. So what I'd say is, if we're gonna go to the upside, let's check it from this perspective. We were rallying from this bottom here. Rallying from this bottom here, we took out the stops up there, but we didn't come back to 50% of the level, so we shot back up, right? Did we come back to 50%? No, we didn't. Then we push over here, we didn't come back to 50, and over here when we finally made the high here, we almost came into 50%, but still didn't achieve. So I would adjust. This is where we might actually have interest. So 50% is somewhere here, so I'm positive that this order block will be filled, and this order block also has a bullish order block, which is relatively like this one. You can see that whole thing. We can just take the whole thing and engulf it like that. So right there, I think just nudging into it, this is where price action could go and continue to the upside. 2, 1, maybe if we don't take out buy side that's resting here, we'll take out sell side here, and then we nudge back and go up. So there's two sides to the story. Either we short. So I think for now what are the chances that we short or we buy. Okay, now let's see. So from this point here, clearly this is a change in character, right? Let's agree on that. So we can say that the market is made at this high, and the market is made that high and that low, right? Because it violated the up down. So we'll change this color so that we know. So put that to purple, and change this one and put it to purple as well. Let me put it to green. I think green is more visible when I step into the lower time frame. So this is green. Right, so we have these two. This is our market. Our market is ranging in here. And then as we are ranging in here, we look for a place where there's a weekly range. So we look at this part. So we clearly have this bearish order block right here. And then we have sunk in 50% into it. Right. And we haven't come back to take out 50% of the level. So if we are to retrace back to 50 to push to the upside, means this high might hold, right? And if this high might hold, we might need to retrace lower so that we can also induce liquidity to take out these highs, and then eventually come to these highs. So I'd say we have a fair value gap right there in the weekly, and that's good candle rejection right there. And then another thing is yes, we have left sell side here, sell side here, sell side here, sell side here. So we might just respect that. So let me jump into no fair value gap in here. And yeah, we left a fair value gap. First entry didn't go for a buy. Second entry, so let's look at the daily time frame. Right, so in the daily time frame, so here clearly the market was in a downtrend. Now we want to look for the market going into an uptrend. So let's find the region. So where did the market change character? So pushed lower high, so we're this low, that high broken, then was respected, pushed high, and finally it broke out. So I'll take this low, map it to the extreme, this one like this, change this to black, change that to 1p. Right, so I'll take this low to that low, right? Usually I could have taken this one to that one, but it's a bit unbiased. So let's see if we can correct this. Correction would look like this. Let's drag this, and then there we go. How many touches we get? Not as accurate, but 1, 2, 3. Yeah, we're living in it. Not as accurate as I thought it'd be, but let's see if we try to do this. Okay, I'll go with the first one. So I'll say this is our channel, right? And in this channel, the market is rallying back up here. So it could just momentarily, it almost reached sell side liquidity. That's resting right here. See, we have sell side liquidity resting right here. I mean buy side. And we've got a fair value gap in there, just this one. So if I see a change in character this side, then I'll go. So what defines my change in character is I had this high, this low, market pushed, made this high, so there's a potential low, and also yeah, so that's potential high, potential low. So I'd want to see the market change in character within that region right there. So this is a daily time frame. So this low could hold. Let's call it a 4-hour. Right, so in the 4-hour, we clearly had a high right here, and this push to the upside. So we had this high. Right, this high was supposed to hold because it was caused by this low right here. The market was ranging in here up until we pushed to the upside. So the high that caused, we've got a crucial region, which is the partial low, which caused that break, which is this one. So if the market is supposed to rally up higher, it should hold this low should hold. Right? Now change its color, make it to orange. This low should hold, right? Because it's the one that caused a push to the upside. It caused the expansion. It's the high that caused the expansion right there. Right, so it should hold. So this is a retracement deeper into this. So I could go bullish because right now we haven't had a proper change in character. I mean, yes, there's a dip, but we could expect a push to the upside. So if the market retraces deeper, let's see, according to this, we almost managed 50. We didn't manage 50, and we didn't manage 50. So in this whole move to the upside, this is premium, right? This is premium because 50 is right here. So this is premium. So I wouldn't want to be buying in premium. I'd rather short. So I would rather do what the market is doing. So I'd rather be going short because there is sort of a change in character right there. Right. So any rally up into this region right here, I would go short because my hope is to buy, but in the long term I wanna rally short because I know the market could buy up until these regions, but I can clearly see there's some sort of change in market patterns and all that. So we can say from this high, this is the rally up, and we can drag it there to there. Right? We can take this one out. Right there. Now we can adjust it right there. So that's our trend line, right? So that's our channel, and clearly we have an ascending channel, and an ascending channel usually leads to a retracement. So if the market does push into these regions, I would short, and anytime it touches the trend line there, I would also short it. So right here would be a nice place to buy, but if it breaks into, I would buy the retracement to push it to the upside there. So what I'll do is no change in character. So this could look like a nice short-term buy because based on this low to this high, market has crossed over to 50%, and we have a fair value gap in here. A fair value gap there. And what else do we have? We also have a bullish order block that had not been tested, got tested in once. So this is the second time. So I think I can take a trade there. So I would go long in this region. Put a tight stop loss. So we want to monitor the events that are happening. So what date is it today? It's Friday 23 December 2023. I'm gonna go check the news. 1 January 2022. So there's high impact news. There is so much high impact news. Yeah, on 1 January there wasn't, but on 3 January there is high impact news. There's so much high impact news. So up until the 5th. So what I'm saying is let's just wait for the market to show us, because I think by Friday, because that's when NFP was released, we could see whether it was gonna help us or anything. So yeah, let's see. So let's drop into the smaller time frame, 15. Because we want to be scalping, right? Because we want to be scalping. So let me delete some of these lines here. So our target is to scalp, right? So in the 15-minute time frame, would want to see a change in character in this region. So clearly with a lower low, right? And a lower low with a sort of change character, but we can say this is one push, another push. So we have this high, this low, push down. So we have this high, this low, and finally this high. So we'd like to see a change in character in there, and that could start to give us some hope. So there's no reason to try and force the market. So I'll just draw. So we're down, up, second leg, first leg to second leg. We've got that right there. So any pullback that pushes us deeper into this, then we can consider it. So let's play this. So I'll stick to the 15 time frame, so that's because sometimes the 5-minute will like change your perspective and stuff. So remember where the fair value gap in here, and we said we had this order right here. So when I see a total soup, would rather expect a run to the lower that rushes to touch these parts, and then we can put so a small fair value gap in there. So we wait. What are we waiting for? Waiting for a change in character. So when I see change in character happening, boom, that's a total soup into the fair value gap. Let's pause. It's gonna run to this trend line here, or near its extremes, then we can take the bull. So possibly it's trying to push to get into this fair value gap right here. So let it move. Expect one more push to the downside, and then possibly when we take out the sell side resting here, then we can go to the upside. Okay, we have a change in character right there. Now let's wait for the retracement. Pause. So the retracement, we're expecting it to happen, and this order block right here, can you see? Got this 15-minute order block right there, and it was fed into. So I'll just change its color to gray. That there. So what are we gonna do? Gonna put our entry. If it bounces back to it, right there. And then when we're gonna put our stop, we're gonna put our stop at 20 pip stop somewhere there. Let's see, where's the stop loss? It's here. And let's minimize this thing because it came from a large time frame. Alright, let me put it back. So what I'm saying is we just go long, put our entry there. We're going long, put our entry there, and we have a fair value gap right there. So if that's gonna hold, we can put our stops right there. Although this dipped lower, I could say that's the turtle soup because then took out these highs, rallied up. Although we still have this high, which I could say we have to still break out this high, but our target will be right here where we have the touch to the trend line. But if we break through it, we're gonna be swooping all the buy side that's here, possibly to swoop buy side that's resting up there. So we could say that's our target, short-term target, and that's our 1 to 4. So open position. What are we risking? We're risking 0. This is the whole account size, right? So initial balance 1000, and we said we're risking 7% of the account size, but this entry is not yet defined, so it's 0.35%. No, that's not. Yeah, 0.35% of the whole account. Is that correct? Because we have 5,000 daily loss. I mean, relative to 100,000. We're saying that's multiplied by 0.35%. That's 350 exactly. So it's the one. So we placed the trade. So, and what was our stop right there? Our stop was 11 pips, but we want 20 pips because this is a bit aggressive, right? So 20 pips, right? Now we can place the trade, and yeah, we target these areas right here. So open position, so place trade, and let's play it, see it pan out. Okay, didn't tag me in, held. I think that's the news events. What day is it today? It's 2 January, and let's check on 2 January. What news events do we have? We didn't have any, but most of them are coming on the 3rd, 4th, 5th. Boom, we got taken out. So it fed into the fair value gap that was here. So we took an L there, but it's okay. So no proper change in character is it because we're still heading to the downside, right? And then what we're trying to do, you can see we have this fair value gap in here. It fed into 50% of it. I think that was a bullish order block. So it fed into 50% of it. So I'll take it, put my 20 pip stop right there, and target these highs. Alright, and then go to target those highs as well. So where's my profit target? My profit target would be the retracement. So from this low to there, it means my profit target should come in here. Yeah, slightly lower than that. Okay, and now let's execute this trade. Open position. So I feel like this is a better trade. So I'll risk 7%, place the trade, and let's go. Boom, got stopped out as well. Okay, so clearly this is not working, so would rather go with the trend, or the market is trying to dip lower so that it's preparing itself for the news. I don't know right now, but seems like a good idea to keep not go against the market, so just let it low like that and just wait till we can be in a comfortable position. So let me just check the 4-hour. Alright, so yeah, let's learn something. Yeah, let's learn something real quick. So clearly we knew that we were in this channel, right? And I did say that this channel is a descending channel, right? So in all this price action that was happening, I should have tried to sell short, because clearly these lows weren't gonna hold. Of course, there's fair value gap, but then, like I'd said, we haven't come back to 50% level, which is down here. So that should be my main target, so that we can push the upside. So right now we are in this fair value gap right here. We've got this low, but we possibly gonna take out all the lows until we reach here. So let's play that. So now we're gonna go into the daily so that we can try to apply my fair value gap method. So we wanna, it's bearish, we wanna identify a fair value gap. So I'll just quickly speed up the time. Okay, we can't backtest in the daily. So I want to push to the upside. So okay, so let's check the daily. Have we closed the daily? Not yet. But we've got a 1-2. So any retrace to push to the upside, we're gonna short right there. We can take a short because of the method I'm trying to investigate. So we can take a short right there. Make it a 20 pip. Yeah, 20 pip right there. Then we can target these regions right there. So place trade, let it play, because now we're no longer fighting the trend, right? Boom, 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 down we go. Gonna have to take out sell side that's resting below there. Okay, should have taken the profits. Yeah, I should have taken. So that's the third entry. So that was entry 1, entry 2, I'll put another entry as well right there, and put the stop above a bit. And I'll open position, place trade. Let's see this in the 15-minute time frame. And what day are we on? We're on day 3 with this high impact news. So I've changed my perspective from fighting the trend to going along with the trend. So we should sweep out sell side resting here. Boom, we got tagged out, but we just fed into this region right here. So I'll use this news to sell short, because although it was going to tap us into our profits, but it didn't, so I'll still short it. Alright, so I'll open a position right there, shorts, and I'll play that shit. Okay, taken out, but where are we? Got this bearish order block resting right there, that just got tapped into. So I would adjust this as well. Put my entry there, open another position, place trade. So the trade is a 1, 2, 3, right? Okay, I'm not tagged in, but the market is just ranging. It's ranging. Tagged me in. They tagged me out. Tagged me out. Tagged me out, then went back in. Let's pause. I'll take this another sell. Take this as a sell again. Place. Trade it. Finally took profit, but that was like after several days. So yeah, this one is a bit long. Thing is, you should realize that if you're going short with an overall direction, anytime you can try to short temporarily, short. Just keep looking for shorting opportunities. So back in the daily time frame, we're now below. Now we can expect to go bullish. Alright, we are in this fair value gap. Yeah, guys, but I'm tired right now. Feeling kind of dizzy and my stomach is growling. I'll catch you guys in the next. But so far, we're down about $200. But you can see we took several L's. Like I don't know that we took several L's. but one profit will gonna bring us back. So which is why you have to manage your risk properly, because each time I was just losing 700, 700, 700. And if I calculate this balance, so from a whole 100,000, I'm down 986.60. Now that's 1,340, right? And I divide that by the daily loss 5,000. I mean the whole account size. I multiply that by 100%. So I'm down 1.3.4%. So which means, in as much as I wasn't being accurate or being precise in making the orders and profits, yeah, but to some extent, can you see that I'm still profitable, right? So yeah, something to watch. And just as another case of feedback, I had realized that these two channels, right? The market rallied up all the way to here. I should have realized that now I'm in a region where I should be selling. So I should have started looking for shorts after there. And then after I crossed over this line again, I should start looking for shorts. And I think the other reason is because the news came out good. The news was very favorable to the dollar in terms of CPI and NFP. And you can see CAD was doing well, USD unemployment increased, NFP was good. So clearly that drove the price down, and which is why if you were shorting, it would have been profitable. And the euro had some bad CPI flash estimates. That's all. Yeah, so that's it, guys. Cheers.
Wow, I just built the most amazing workflow on money.com. You build your own workflow? Why? There are a bunch of main templates you can just need to know. And when they click submit, on currency trades. To break that market just for these types of scenarios, divergence in one specific location or line. Dissipate some selling pressure. Once price posts a market structure shift lower, your attention as the trader moves to this specific low in price, right there. Inside that low, what we're going to be focusing on is the last down candle, because the last down candle is where the buying took place right before that little short-term rally up. Since price broke below that low at a subsequent later time, which is really there's no rule as to how long it takes before that low is violated. We just note it, and when it's broken, it's seen as a short-term support level that's given way with a bearish context behind it. So when we see that, we're seeing the evidence is that there are smart money entities behind the marketplace driving price lower. Now, at first glance, it looks like, well, this is a missed opportunity. But no, what we do is we focus on this low because that last down candle will give us a bearish level to sell into. When price drives back up into that little short-term low we just referenced, there's going to be 3 reference points that you need to be aware of. The market structure shift is seen here where we're tracing back into it, right there. What 3 points are used at this moment? You have point A, point B, and point C. When price actually returns to the point of A reference, the long positions taken from A to B price swing will have an opportunity to liquidate or mitigate their losses that were occurred during the price move from B to C. And this can result in new lower price swings to C for retesting, or a significantly lower price moving into a support level that's under the market price. In short, this is an opportunity to sell whatever particular market price that this is. Do you know what's hiding in your business's data?